Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos on the technical analysis that I'm seeing in the charts. So today we've got S&P Biotech ETF here, XBI ticker, and we had an insane week this week. So let's get into the technical analysis. Here I've got you can see here in the last week we had this enormous green bar breaking up above this very strong resistance line. I think the resistance line was actually here at the 38.2 fib level, so that might be more accurate, but we broke above it and you can see the momentum and the power that was building in this move throughout this entire build-up period right here. So I originally thought this was an ascending triangle, or at least that's what the price action was doing. However, I was a little bit skeptical because there was all this white space, and I'm still a little bit skeptical whether or not this is an appropriate ascending triangle. I'm leaning towards no. But nonetheless, I think I discovered something new, which I hadn't seen until one of my friends actually pointed out on the chart that this might be a diamond here. And I charted it, and it looks fairly appropriate to be a diamond. It looks like a continuation diamond. A continuation diamond is marked by an even number of touches. A reversal diamond has an odd number of touches. So what do I mean by these touches here? So we come down, we set our low, and then we kind of move into this price here, this pattern, and we have 1 touch, 2 touches, 3, 4, 5, 6, 7, 8, and then we break out of this triangle here. So 8 touches, it's a continuation pattern, and what is the measured move here? Well, it's from the bottom of this triangle, or diamond here, right over here at about $53, up to the top, the highest point. So the wicks here come to about the $69. So 53 to 69, it's about $16 move. So from this dotted line here, let's make these orange so they're a little bit easier to see. So this is our measured move inside the diamond. We clone this here, and we move it to the point of breakout, which is right here. And we have our measured move. This is our first target. This is our first technical target. Now, unlike ascending triangles and descending triangles and a lot of other patterns, head and shoulders patterns as well as diamond patterns are the strongest patterns in our toolbox because of the overall trend follow through that we see afterwards. Measured moves on ascending triangles and diamonds usually work out very well. However, on this is our first technical target, and it looks like it was fairly accurate this week in predicting this. But what I mean by the overall trend is that you'll see a head and shoulders right here, and the full measured move would be from the top here to the breakdown point, and then we clone this and bring it over here, and it might come down to here, but the overall pattern lasts much longer than the actual measured move does. So this would be our first, technical target, and you could see a nice bounce up from this point. However, the overall trend continues to make another large leg down. This is kind of the same thing I'm predicting with this. So this is our first technical target. It's also interesting to note here that our Fibonacci drawn from the top of this to the bottom, we are testing our 23.6% fib level. This is a natural resistance here at this level, and it makes sense that both our technical target as well as the natural resistance came in to stop us here on XBI. Absolutely crazy week here for the biotech sector. I know that LABU, the 3x ETF, was up something like 45%, and LABD down something like 45%. Anyways, this is on the weekly chart here, mind you, so I can see a lot of profit taking here in this wick, and you can't really blame them. However, it is a lot of profit taking. You see profit taking over, here, before we rebound a little bit over here. You can see with this big fall, we have a lot of profit taking. This fall, we have profit taking. You like to see these smaller wicks with smaller rises, but this was just an all-out momentum play upwards. So from the weekly, let's get into our daily chart. So first thing I wanted to talk about was our Fibonacci over here. I had a confluence resistance. Now confluence is when two indicators kind of align closely together, and I have drawn 2 different Fibonacci levels here. One I drew from this high to this high over here. We had bounced off of this level and chopped around quite a bit, and so this was an important level for me to mark over here, and then I still have this same absolute high to absolute low here. And of all these numbers, we can only see 2 we can only see 2 areas of confluence between these 2 Fibonacci levels. So when 2 indicators align closely together, I see our first one right here. We have our 78.6 as well as 38.2. This is a key area of support and resistance, and we see price had a hard time. We bounced a lot. We came back down to touch it one last time. And the next area of confluence resistance I see is this level right here. So I drew a black line and labeled it to predict this. This is my video last week, and it looks like we came up here to touch this level. So after getting Fibonacci out of the way, this is a major resistance level, and if we break out above it, I see very little resistance until this $84 level, and we'll probably break through that and go to all-time highs. You can see this channel that we've been in for the better part of the last year and a half. It's been an upwards channel, and we finally broke out above it. We had this megaphone pattern. Price rises up into it. We have our A, B, C, D, E, come crashing back down. And we set in this new pattern over here, which I was very confused because biotech has been one of the most confusing sectors to analyze as of late, just because I'm getting a lot of false signals, a lot of false divergences, and conflicting patterns. So, for example, here on the daily chart, I had a cup and handle, which is categorically a bullish pattern, but on a lower time frame, like the 2-hour, I was seeing a ascending wedge, which is categorically a bearish signal. However, this just goes to show that you should listen to your higher time frames over lower time frames because we had a massive rise in price here. So if this is a true cup and handle, which I think it is, our measured move would be from the bottom here to the top of the cup and handle. So I have this in blue. Clone this, bring it over here to the point of breakout, and this is our measured move. We can see that our wicks got a little bit above it, but it did a fairly good job of predicting within about $1 of the final technical measured move. This kind of closely aligns with our diamonds measured move here. Our diamonds measured move came up to about the same confluence resistance level. So, like I said, this is a major level to break out above, and I can easily see us taking a breather and moving sideways, or retracing a little bit before moving up higher. Let's go to the 2-hour chart. So, like I said, on the 2-hour chart, I was seeing an ascending wedge pattern take place here. I still have our long-term resistance level as well as support level that we got from the weekly and daily. This is the neckline from our diamond pattern. I just kind of tried to show it a lot easier here, a lot more clearly. So we have our high, lower high, lower high. So this is our neckline right here. Once we break out above it, you can see the overall price action has been very bullish since we broke out above this level. This neckline is new here. For several videos, was only seeing this ascending wedge pattern here. So I thought we had our A, B, C, D, and I was predicting E over here. And then we were going to fall down, but we continued to move up higher. And so I'll go ahead and take the L on that. Can't win all of them. I was also seeing these negative divergences here. So we have a high and a higher high, but we have our indicator making a high and a lower high, as well as our slow stochastic here moving downwards, and our RSI was moving downwards. So I had a lot of indicators pointing downwards as well as the pattern. However, like I said, on the daily time frame, I had a cup and handle. So since these were wrong, I'm going to go ahead and delete these and talk a little bit about what I think was the actual case here. So over the last week, I did a lot of studying and came across a new type of divergence, and it's called the hidden divergence. And this is basically what it is. So if our oscillator makes a lower low while price, the overall direction of price is bullish, this is a bullish hidden divergence. So a regular divergence is when we have a lower low and a higher low. So we listen to the oscillator, we listen to our indicator, and when it's hidden, we listen to the overall direction of price. And so if we take this into account, just remember low and higher low in price, and our oscillator makes a lower and lower low. This is a hidden bullish divergence. So if we go over to what I thought was a bearish divergence here at the top, we would instead find ourselves looking at a bullish hidden divergence where our price is moving upwards while our indicator is moving downwards. And the psychology behind this is that price and our indicators are kind of taking a breather after moving up so fast. See, we had this large rise here. Our indicators get to their height and we need to cool off a little bit, and we take our time here. This was over the course of about 3 weeks where we just moved sideways in between this $2 range. And this gave our oscillator enough time to cool off and all our indicators to go back to their very low point, while price is still, moving higher, or sideways. And so this would be a bullish hidden, because once we hit this low, we have enough we've regained enough energy to support another big run upwards. So one more time with this hidden divergence, we have price moving up, indicator moving down. We have price moving up, indicator moving down for our bullish hidden divergence. So I missed that, but we'll add this type of divergence to my overall toolkit in analyzing ETFs. So we go to the 1 hour chart. So on the 1 hour chart, this might still be an ascending triangle. It was a pattern that lasted through this for many months here, and it's hard just to dismiss it right away. But this could be a false breakdown here, and this could go into an overthrow so you might be thinking to yourself, what the hell is an overthrow? Well, it's when price rises above the pattern in an unorthodox manner. And an example of that would be here when we have this other ascending wedge. We come up and we have 1, 2, 3, 4, 5. This is our overthrow. And then we come down and actually do the final pattern. This might be an overthrow here on this hourly chart of XBI. However, with the momentum behind this move, I would be very careful to count on this overthrow as being the actual situation that's playing out here. However, the nice thing about overthrows is they occur on almost every single wedge, and they present a very nice situation to profit if you're able to appropriately recognize this as an overthrow. So after we finish the 1 hour chart, let's go to the 30-minute chart. On the 30-minute chart, things start to become a little bit more clear for me in terms of the medium-term pattern that I should have been seeing. I was really just sticking to what I was seeing on the hourly and 2 hour chart, which was that ascending triangle. However, if you take that away, I think it becomes a lot clearer that this might have been just an ascending triangle, a very well-defined ascending triangle. And it's a pattern I cannot believe I missed. However, so this blue line, remember, is our neckline. So once we break out above it, we get into territory of looking for new patterns. So new patterns that are playing out here is, if you look at this, this looks like an ascending triangle. We come up, hit resistance, come down, make support. This is our A, B, C, D, and E. And then we break out after we've hit our final point in this pattern. Again, this looks like a false breakdown to me once price breaks down out of this pattern, but immediately rises back up into it. And the measured move for the ascending wedge pattern would be to go from this swing high to this swing low here. We see this dotted line as our measured move. We bring this over here to the point of breakout, which was right at this resistance level. Could almost make it be right at this above level. And technically speaking, price should have paused, moved sideways, or gone down at this level, and we see just that. We came down a little bit, and then we're continuing to move higher. So over the course of this video, we've had 3 measured moves saying that this range right here is extremely important. We're hitting a major area of resistance at this point. Let's go to the 15-minute. On the 15-minute, and this is just kind of getting into my previous videos, I haven't done too much on the 15-minute. So we came in, had this ascending triangle here, A, B, C, D, E. We had this false breakdown, and we moved up higher, and then we came back down. The measured move for this is marked by this orange dotted line, swing high to the swing low, point of breakout. And this was our high for this pattern before coming much lower. We saw a divergence take place right here, where our oscillator makes a higher high 3 times while price makes a lower low. And this would be a regular divergence, and we can see the effect of this come into play. One thing to note here on the 15-minute is that we do have this kind of RSI divergence taking place here. If we raise this up, we can see that our RSI is consecutively making lower lows while price makes higher highs. This would be a regular divergence. This would be a longer term regular divergence, but we do have a bit of a hidden divergence. Another example that would be good to point out is as our oscillator makes a low and then a lower low, while price makes a low and a higher low. So right now we kind of have 2 conflicting divergences going on. This would have been a bullish one, and you can see the momentum behind that. However, we have a longer term RSI is moving downwards. And so I'm interested to see what happens here in the coming days. Let's go to the 5-minute chart. I don't have much here on the 5-minute chart, but what I do have is on the 1-minute chart. Basically on the 1-minute chart, I just wanted to go over this because it was kind of like a day trader's paradise looking at the price action for this thing. So let's just look at the price action and the patterns that we see here in the 1-minute. So this was our breakout area over here. So this was kind of where we started to break down. You can see this coming into effect over here. We bounced up, we had this retest, and we went higher. Then we had a flag come into play, and we broke out of this flag. We retested right here, and then we moved higher. The measured move for this was from our point of breakdown, or our resistance, previous resistance level, which fell right around here. We clone this, we come up here. This sets in the highest high for this pattern. And we fall back down, and we kind of come into this complex head and shoulders pattern, where we have two shoulders on each side. What's a complex head and shoulders? Well, a complex head and shoulders looks a lot like this right here, where we kind of have a head and shoulders within a head and shoulders. So we have a higher left shoulder, lower left shoulder, head, right shoulder, and a higher right shoulder before we finally break down. So if you were to invert this where the head was down here, this is the pattern that I saw. So we kind of have this very fractal-like, fractal meaning it's similar on both sides. So we come down, make our left shoulder, head, right shoulder, and our right shoulder. And this was kind of the point where we previously broke down. You see this big dump. This is a major resistance level, and I marked this. And so the measured move for this would be from the bottom here to the point of breakdown, or the previous high. Then we would take this and clone it, bring it over here to our point of breakout, and we can see that this came close to being our ultimate high over here. Then we came into another pattern, which was this nice pennant here. We can see that we had our A, B, C, D, E, and we broke out. The measured move from this would be the rise into the price action, marked here by this blue dotted line. Come over here, clone it, bring it to the point of breakout, and then this would be our measured move upwards. We can see that price stalled out here for a long time and moved up a lot higher. And sometimes you can almost do two measured moves here, so you can bring it to the low over here. However, this didn't really work. Then it took me a long time to try and figure out what this pattern was, and I can't really, it looks like a bearish cup and handle, something that like broke down, it failed. It kind of looks like a double top, triple top here. I couldn't figure anything out for the longest time, then I finally came to the conclusion that it looks a lot like a Gartley. I don't usually use Gartleys, but for those who are interested in technical analysis, these are the two main types of Gartleys here. So where price starts here, we have this large rise into A, drop B, C, D, and then price moves higher. And an example of this would be something like this here. And this kind of looks, and so for me, this kind of looks like you could use it as a Gartley for those traders that trade Gartley patterns. I know a lot of people in Forex do. This looks kind of like the picture that we have over here. Anyways, I just wanted to recognize it. And so we have this overall Gartley pattern, but on a smaller time frame, we have a bear flag right here. It's a pretty good definition. So our measured move for the bear flag is this dotted line coming into it. We clone it, bring it over here, and this marks our area of support. We kind of have this head and shoulders down here, left shoulder, head, right shoulder, and then we break out. This is the neckline going through here. We break out, we retest this neckline, and then we have this massive move up higher. We come into this ascending wedge pattern here. We set our resistance, our support, A, B, C, D, E. And we shoot up higher again. We have a triple top here, one top, two top, three top, and you can see that we break down. And then we continue our bullish momentum into this larger wedge pattern that's going on here. And we have a nice Adam Eve double top here. Again, this is on very short time frames. This was a pattern that occurred over about an hour. I just like to try and identify them. So what's an Adam Eve top? Well, Adam Eve top is basically where you have this rise up that immediately falls down as an atom, and then the Eve is more of a rounded, longer term top. And the measured move is from this bottom point here to the top, down to, and then you clone this, and then you bring it to the breakdown point, and that should be your full measured move. Again, this is the measured move, you clone it, bring it down to C. So I did that here. These are two separate patterns. You can see it worked out fairly well. So from the bottom here to the top, point of breakdown, and we came just shy of reaching the full measured move here. However, this is an Adam Eve top. It's pretty nice to be able to find these. Pointed top, rounded top, and we break down. However, the larger pattern here was another ascending wedge, A, B, C, D, E, breakout. And the pattern that we're currently in is a strange one, and I'm just making a guess right now on what we might see. I think that we might see this complex head and shoulders play out here. So what do we have so far? We have the higher left shoulder, the left shoulder, and potentially the head, and we have yet to make the right shoulder and the right shoulder. So we went over it earlier, but this is a regular head and shoulders. The other one was inverted. So we have our left shoulder, head, right shoulder breakdown. So this is kind of what I'm seeing right now. We have a similar pattern, and I think it's interesting to note that there is a head and shoulders kind of in between a head and shoulders. So there are kind of three head and shoulders in this pattern. I'm going to go through them. So this one, 2, 3, 4, 5, 6. That's one. We have a smaller one, 1, 2, 3, 4, 5, 6. That's one. And then our third one is on the actual head itself, which is 1, 2, 3, 4, 5, 6. So I think that we are right here, and we have yet to form a definite head. So what do I mean by this? I think that as far as the actual head goes, this might be our 1, 2, 3, 4, 5, 6. But this is all just speculation for me at this point. And XBI is incredibly strong. And like I said, I will be very interested to see what plays out in the next week for biotech. I know that the healthcare bill is influencing the price action right now, as well as we're seeing some weakness from the tech sector, which is probably causing some distribution and reallocation of funds from the tech sector into other sectors. And my prediction is that it's biotech. And that's why we're seeing such a strong sustained move upwards here for biotech. So for the short-term future, I am currently bearish on biotech. I think that we've moved up, 15% in the matter of 4 or 5 days here. This is an insane move from biotech, and I can easily see us coming back down and testing some support levels that we've created on the 15-minute chart. But it would make sense for us to have a little bit of retracement instead of just continuing this parabolic move upwards all the way. It cannot continue to run forever, as well as this confluence resistance point, the 3 measured moves that I did in my video from the diamond, the cup and handle, as well as the ascending triangle. All 3 of those measured moves fall in this area. The potential head and shoulders that I am trying to recognize early on the 1-minute chart, medium term and longer term, I guess, is fairly unclear to see what happens with that healthcare bill. However, we do have strong momentum at this point, and it would make sense for us to continue our run upwards given this extreme bull momentum that we've seen this week. Anyways, that's been my analysis here on biotech, and I hope you got something out of this. If you like this video at all, I know it was kind of long. There's a lot of different things going on in this chart. Please like and subscribe. These videos take me a long time to make, and it's nice to see that other people enjoy them as well. Anyways, I wish you the best of luck in trading next week, and have a good night. Bye.